Welcome to today's market report. European shares retreated from near one-year highs on Wednesday as concerns about a possible rise in inflation tempered optimism around a vaccine-led global economic recovery, while Kering tumbled after sales at its Gucci brand fell more than expected. Shares of the French conglomerate, which also owns the Saint Laurent brand, slumped 6.2% as revenue for the whole group fell 6.2% in the fourth quarter. The broader European retail index fell 2.9%. The pan-European STOXX 600 index was down 0.4%, with healthcare, telecoms and financial services stocks also leading declines. London's FTSE 100 fell as inflation picked up by a little more than expected in January, while British American tobacco slumped despite stronger annual profit. The commodity-heavy FTSE 100 was down 0.5%, with BAT as the biggest drag. British inflation rose a little more than expected last month as the country went back into a coronavirus lockdown, pushed up by higher food prices and less discounting of household goods, such as sofas, official data showed. The mid-cap FTSE 250 index fell 0.3%. British fund supermarket Hargreaves Lansdowne slid 7.6% to the bottom of the blue chip index after Peter Hargreaves, the largest shareholder and co-founder, sold $416 million worth of shares. Bullish oil prices marked time on Wednesday as support from supply disruptions in the US South caused by an Arctic blast was offset by expectations that OPEC Plus producers may ease their output curbs after April. WTI crude futures dipped 3 cents to $60.02 per barrel. Brent futures gained 11 cents to $63.46 per barrel. Gold was down 0.73% to $1,785.40 per ounce. On the FX front, the GBP-USD pair maintained its offered tone through the early European session and had a rather muted reaction to the release of US consumer inflation figures. The pair witnessed some selling during the first half of the trading action on Wednesday and retreated further 34-month tops around mid-139s touched in the previous session. The downtick was sponsored by some follow-through US dollar buying interest, which remained well supported by the recent runaway rally in the US Treasury bond yields. The market has been pricing in the prospects for the passage of the US President Joe Biden's stimulus package. The reflation trade in turn pushed the yield on the benchmark 10-year US Treasury bond to the highest level since February 2020, around 1.3%, and was seen as the key factor that underpinning the greenback demand. That said, the downside remains limited amid optimism that the impressive pace of vaccinations in the UK would allow the Prime Minister Boris Johnson to lift COVID-19 restrictions and get the economy moving. Euro-dollar remains under pressure below 121 ahead of the European Open as the US dollar clings to the recent gains amid a rally in the US Treasury yields. The main currency pair traded at 120.92, down 0.10% on the daily basis. The spot witnessed good two-way businesses, initially climbing to 3-week tops of 121.70 before tumbling to the lowest levels in 2 days, just under 121 level. According to the UOB Group, the upside momentum in Euro-dollar now looks deteriorated and could spark a move to the 120.45 level in the next weeks. The GBP-Euro exchange rate has retreated from its push towards the 115 level after the European economic data for the region saw an improvement. GDP was slightly better than expected, but the sentiment figures for German and the Eurozone saw large increases. Sterling Euro now trades at 114.45 with a drop of 0.15% on the day. Fourth quarter GDP for the Eurozone saw a slight improvement, with the quarterly number showing a drop of minus 0.6% compared to the 0.70% expected. The year-on-year estimate was also lower than forecast by 0.1% to minus 5% for 2020. The Dutch GDP number was released earlier and showed a minus 0.1% drop for quarter 4 after expectations for the 0.2% growth. The larger economies are leading the way. However, France's improved unemployment to 8% was enough to support the single currency. The dollar pushed higher in early European trading on Wednesday, following a surge in US bond yields on the prospects of a prompt economic recovery and a possible acceleration in inflation. The dollar index was up 0.3% at 90.757, bouncing from the 3-week low of 90.117 hit on Tuesday. Dollar yen was flat at 106.06 after earlier hitting a 5-month high at 106.22. This is today's market news. Thanks for listening. We'll see you next time.